Greetings, traders. It's Thursday, January 3rd, 2013. My name's Des Woodruff. Jobless claims numbers come in this morning, and we increased from last week by 10,000. So those looking for benefits increased by 10,000 for jobless claims last week. That was out today. That was some sobering news. With that, we have a down day today after yesterday's ginormous pop in the markets. Gave a little bit back, but not too much. We just kind of stayed pat. We have the S&P down 0.2%, about the same on the Dow. Nasdaq down 0.4%. Russell's down 0.16%. Banks, though, get this, up 0.25%. So with the markets being down, you have financials staying very strong. That's good. And a drop of 0.8% here in the volatility index. That's the fear indicator, the VIX, VIX. Gold off, though. Man, commodities took a hit. Gold off by 1.2%. Silver off by 2.5%. Crude oil off by 0.25%. U.S. dollar up a whopping 0.83%. And that really put pressure on the indices. So, and it was something else I want to bring up here. Transportation in positive territory, up 0.63%. Really showing strength for the Dow. And utilities up just a fraction. So not too bearish out there at all. And however, I want to show some things to you technically that has me concerned. Yesterday we had this ginormous pop, boom, straight up, closing at the day's high. The thing that was really important to me was the close that took place over this big dark blue trend line. That goes way back to 2007. If you want to see where I connected that to, go back to yesterday's video. We closed over that, really giving us a decent chance of continuation, which I still believe we have that. But something I want to show you here, we did make a higher high. What's interesting is we found resistance here, and that line goes right here to the swing high. That's the 1465 area coming across. 1465, it was an area of resistance. It retracted from there, come right back down. What's interesting here is we closed below 1460. Gang, that is a big number because that's where that major trend line was. We closed below that. So now that we popped above it and closed below it, if we do make a lower low tomorrow, and that is if we go lower than 1455, if that happens, then this area where we popped out will be called a jab. A jab is something that breaks out of a trend line, immediately reverses, comes back in within the area of resistance. Now let me show you something on the weekly chart. If I go to the weekly chart, it doesn't surprise me as a technician that we pulled back down. We were over this major trend line, but now we're right at it. So the week isn't over with yet, but what I can tell you is we could not be any more against resistance than what we are right now. Big benefit that we have here is MACD is on the positive side, giving us a positive tick, and we have the MACD line rising with the signal line chasing. So all that is positive. The question is, will we see continuation, and can we break out? So what is so important to me on how we end the week is, will we end the week above this major trend line or below it? That will tell us what the next week will bring us, or at least will increase those odds significantly. Let's take a look at Apple. Apple on the weekly chart, we dropped or dropped, we popped, we dropped, we dropped. Now we pop. What was serving as support, now support once broken is acting as resistance. So that is problematic here. So it's popping on little volume. So Apple on the weekly chart looks pretty bearish. On the daily chart looks more bullish because on the daily chart we have a falling wedge. It has broke out here and it's pulling back. I would say a pullback to 532 would be an awesome area to buy. 532, that would put us right here 534 area of resistance here, support here, a lot of support with these lines, really nice area. Be looking for a purchase if in fact it can pull back. Take a look at Google. Google's been taking off. Let me get rid of a couple lines here. Take a look. We had a triangle. It broke out. Little bull pullback and a rally. We have missed any sort of bullish opportunity with that pullback. The idea would have been to purchase this on this bullish engulfing pattern right there. We'd still be in this trade, be looking to exit the trade on a lower low, especially if it dropped below 720. Let's look at GLD, gold. Gold took a real big hit today. Here we popped up, but now look at this, dropping hard below a major area of resistance, and we're finding support at the 200-day moving average. So that's where we're at. Be watching your emails coming up this weekend. Once a month we give a free class, and the free class will be this Tuesday night. So you'll want to get registered for that. First come, first serve. They are very popular. A lot of people sign up for these. So just giving you a little heads up, on Tuesday night we're going to be doing the all popular, very important 101 trading class, and you'll want to be a part of that. So anyway, with that, thank you very much for being a part and a user that spans over 155 countries, and we do appreciate you being a part of this. Take care and safe trading to you.